Good evening and welcome to another edition of Capital Markets on Channels Television. I'm Ini John Mekwa and we begin with a few market updates. It was a broadly mixed close for the global equities market this week. Across Europe, markets ended Friday's session slightly mixed, with attention turning to key economic data from the Eurozone and the United Kingdom. The UK's FTSE 100 fell by 0.02%, Germany's DAX gained 0.44%, and the France CAC index closed the day higher by 0.68%. Over to Asia, Japan's Nikkei 225 index was up by 0.78%. China's Shanghai Composite Index dropped more than 0.5%, while Hong Kong's Hang Seng edged up by 0.03%. On Wall Street, the Dow Jones Industrial Average ended trading sessions up 0.38%, while the Nasdaq and the S&P 500 fell by 0.48% and 0.08%. Meanwhile, it was a brutally bearish week for Nigeria's stock market this week as sell-offs dominated the entire 5 trading sessions. The all-share index dipped by nearly 3% to close the week well below the 39,000 level, while the equities capitalization also fell by 20 trillion naira level it achieved since December 2020, after dropping by more than 620 billion naira within the week. However, activity levels were stronger compared to the previous week, as trading volume and value rose significantly by 65.4% and 69.2% each during the week. Performance across the 5 key sectors of listed equities was broadly negative, as the industrial goods index led the losers chart down by 3.34%. It was followed by banking and insurance sector index. The oil and gas index emerged as the week's only gainer, up by 7.39%, while the consumers goods index closed flat. The trio of Zenith Bank, FBN Holdings, and Fidelity Bank were the most actively traded stocks for the week, as they contributed 23.70% to the total turnover of volume and 28.49% to the value of equity transaction for the week. And some corporate news now. FMDQ Securities Exchange has approved the quotation of additional commercial papers of Nigerian Breweries PLC on its platform. A statement from the exchange released on Tuesday shows that the paper comprised 1.05 billion naira series 12, 0.94 billion naira series 13, and 2.67 billion naira series 14 commercial papers under its 100 billion commercial paper issuance program. The quotation brings the total commercial paper issued by the Nigerian breweries since the renewal of its 100 billion naira program in 2019 to 156.20 billion naira, with a total of 14.76 billion naira currently active. Meanwhile, Nigerian breweries says funds raised from the commercial papers would be used to meet the working capital needs of the company as it contributes to further deepening the domestic debt market. And Access Bank has announced that its wholly owned banking subsidiary, Access Bank Mozambique, has completed the acquisition of African Banking Corporation in Mozambique, a subsidiary of the London Stock Exchange listed Atlas Mara Limited. This is the bank's 5th acquisition in 4 years. Recently, the Tier 1 financial institution announced that it had acquired South Africa's Grow Bank. The bank's group managing director, Mr. Herbert Wigwe, says the bank is building the skill necessary to compete effectively and efficiently in key African markets outside Nigeria and ensure that it delivers a sustainably strong return on invested capital in its African expansion. Access Bank, which is listed on the NGX, in Nigeria's biggest bank by customer share. And it's another good month for the primary bond market as the Debt Management Office held its monthly auction of federal government bonds on Wednesday. At the PMA, the DMO offered instruments worth 150 billion naira to investors through reopenings of the FGN March 2027 paper, the March 2035, and the FGN April 2049 bonds. Investors' demand for this month's bond offering was much stronger compared to April's subscription, as the debt office allotted instruments worth 175.25 billion naira. The DMO has so far raised 1.09 trillion naira year to date, as its bond auctions, including non-competitive sales to public agency, and has a domestic funding target of 2.34 trillion naira towards the projected deficit of 5.6 trillion naira in the federal government's 2021 budget. Even more stories. Now, let's check some company earnings released within the week. Chemical and Allied Products PLC on Tuesday published its audited financial statement for the year ended December 31, 2020. According to the financial statement sent to the Nigerian Exchange Group, the company's gross earnings jumped about 3.9% to 8.73 billion naira, up from 8.41 billion naira reported in 2019. However, the paint and industrial product makers' operating income fell by 26.6% to 1.5 billion naira. Its pre-tax profit dropped by 29%, while its profit after tax declined by 29.79% from the 1.74 billion naira reported in the previous accounting year. Still on earnings, Maya Paint also reported a mixed performance in its scorecard for the first quarter of 2021. According to the unaudited financial statement sent to the NGX, the industrial company's revenue for the period dropped by 15.5% year-on-year to 223.5 million naira, while cost of sales fell by nearly 13% to 145.16 million naira. At the same time, its profit within the period surged by about 123% year-on-year to 5.68 million naira, while its earnings per share was up by 120% at 1 kobo within the first quarter of the year. And the Nigerian Exchange Group recently launched the Stock Africa is Made Of campaign, which seeks to promote its new brand identity and highlight Africa's potential growth. The virtual event, which was attended by the President, Muhammadu Buhari, the Minister of Finance, Budget and National Planning, Zainab Ahmed, as well as some top government officials and capital market stakeholders within and outside the country. It was a launch of the campaign, and the Group Chief Executive Officer of NGX Group, Mr. Oscar Onyemans, gives highlight of what to expect from the demutualized integrated market infrastructure following its successful transformation from the Nigerian Stock Exchange.
Our customers can expect to engage with a vibrant, disciplined, inspired, and engaging personality that permeates across our brand touchpoints and employees. Building on the strong reputation and corporate governance the Nigerian Stock Exchange has established over recent years, NGX Group is poised to become the premier exchange hub in our region. We intend to add new subsidiaries and business lines that complement each other and support an integrated value chain approach to providing better services to our customers at scale. As we march bravely into the NGX era, we look forward to impact-creating partnerships that will unlock value for our stakeholders whilst improving the state of the Nigerian economy. It is a period to reinforce on the global stage our great African pedigree and the stock Africa is made of.
And still on the launch, the presidents of Dangote Group, Aliko Dangote, also commended the successful demutualization or transformation of the Nigerian Stock Exchange, which led to the emergence of the NGX Group PLC and its 3 subsidiaries. Commenting on the launch of the Stock Africa is Made Of campaign, Mr. Dangote says the NGX is on the right path with demutualizing as the new business model in its drive to achieve profitability, corporate governance, innovation, and matching global competition.
The transition is historic as the NSE joins other exchanges around the world which have embraced demutualization as a business model to meet the increasing demands of digital technology in managing investments. It is pertinent to note that as physical borders are disappearing, accompanied by rising global competition and advances in technology cost, stock exchanges around the world are re-evaluating their business models as to be more innovative. Many exchanges have adopted demutualization as their business model, bringing about major shifts in ownership and corporate governance structure. In demutualization, there is conversion of member-owned non-profit organizations into profit-driven investor-owned corporations. For the Nigerian Stock Exchange, demutualization will provide access to capital that can be used both for investment in new technology and for participation in other businesses connected to the exchange.
Well, we have a lot to talk about today, from the happenings in the market to the launch there. And joining me to talk about that is Mr. Tosin Anyofalo, the Senior Manager at Zedka Partners. Good evening, and thank you so much for joining us.
Good evening. Thank you for having me.
Yeah. So last week, the whole session in the equities was negative. What happened? What was happening?
I think it was an offshoot from what we saw globally. There was a lot of sell-offs we witnessed in the global markets, and the Nigerian markets were also not left out of it. The volatility we've seen in the markets in recent times has been on the rise, and as such, sometimes we expect these kind of weeks, but not, to be delayed for too long. I think we might see a bit of pickup from next week, especially with the banking stocks taking a beating for most of the week. And they're still like the preferred place where investors like to play in the market. So I think what we'll see going into next week is some investors picking up the lower prices. And
that'll be like buying the dip.
Exactly.
That's becoming very common
yes,
now.
I think we heard buy the dip a lot last week, especially from the retail side. And yes, we expect some of the investors to, on the institutional side, to buy the dip, opening the markets on Monday.
Okay, then on a particular day, Airtel lost 10%, even though, they got a little bit of gain the next day and all that, but that's a lot, 10%.
It is, but most of the volume that went into it is still retail in nature. So I tend to, advise investors to sometimes discount a lot of volatility they see on this stock when it's not really a huge ticket move. If it was a huge ticket move, then we'll try and find out some information as to what someone is thinking. Maybe a big ticket investor is exiting a position or something. But when it's driven by, when volatility is driven by a lot of day trading, it's very easy to discount that. And as you can see, what happened was the next day it bounced back. So stuff like that, we tend to put to the side. It happens, just hold your horses, especially when there's not material information driving that sell-off on the stock. We and the markets pushed back on the price of the stock the next trading day.
And then the corporate earnings season this quarter seemed like it was not so impactful.
It's a tough one. We're coming out of a recession. We're coming out of a tough economic time as a nation, and as such, we expect to see these things affect the earnings of these corporate entities. Inflation, even though the last inflation figure to come out dipped a bit, but inflation is still very high, and it affects a lot of the inputs to, especially our FMCG companies. So when we see earnings come out like this and not show, sort of show that negative impact, I believe the markets expected this, and these is somewhat priced in already, and as such, the markets would find its footing very soon.
So GDP figures is expected from the NBS tomorrow. Where would it go? Which way? And how will it affect the market?
I still think it would be. I mean, everyone is holding their breath to see what it is. Everybody's expectation is wide. Usually, we all expect the same thing, but now everybody has different expectations.
Especially after the inflation figures came and shocked everyone.
Yes.
Because nobody predicted that it was going to go.
No, we all called a higher inflation figure. I think we were used to it. It's just been going month on month higher, and we haven't seen that much positive, indicators or positive news that would, give us that confidence that, Nigeria is probably moving in that positive direction economically. I think the GDP figures might be, a downer when it comes out tomorrow.
Okay,
but we'll wait to see.
Just hold your thoughts. We'll continue this conversation. We'll just take a short break now, and then when we come back, we'll continue this conversation. And of course, we'll talk about the launch of the stock Africa is made of. You're welcome back. You're still watching Capital Markets on Channels Television. And we have with us here Mr. Tosi Anyonfalu, sharing his thoughts about activities in the markets. Well, you were talking about the expected outlook for the GDP figures tomorrow and how it could affect the markets.
Yes. Okay, let me track back and see what happened this week on the fixed income side. We had inflation come out early in the week, and then the bond auction midweek. A lot of the activity during the week has been skewed to the bearish side of things, with a lot of sell-offs, even after the supply of bonds from the DMO's monthly bond auction, and we saw rates rise as high as 14.25 at the long end of the bond yield curve. Next, going into the week after we get GDP. On Sunday, the next thing is the MPC.
Yes, on Monday
MPC. So
and
the market is probably going to hold its breath to see what the Monetary Policy Committee is going to do next week, before then taking a decision as to where they would like to, go in terms of investment decisions. The government is under pressure to raise as much as it can for the budget, and even the Eurobond market saw a bit of sell-offs in response to the president's request to tap the Eurobond market. And I think the figure going around is about $3 billion. Although the market is a bit favorable for Nigeria to tap the market, really, because with rates averaging between 6 to 8%, it's still around the same levels where the last bond was issued, which is about below the same level, which is about 9%. So it's still positive, favorable for the Nigerian government to tap the Eurobond market to augment the local bonds markets, which is raising funds for the budget, for the 2021 budget.
So which way do you see the MPC going?
The MPC is more likely than not to either raise rates or maintain its rates. I don't see anything that
there's a
will
possibility for maintaining it again?
Yeah, most likely they will maintain. I think they would jump on the fact that inflation didn't come out higher and say maybe the monetary policy actions they took at previous meetings need some time to work that out. They may or may not be swayed by what happens to GDP report tomorrow. Everyone is looking out for that report. But more likely than not, the expectation is that they would either maintain or raise rates. And the market is calling a raise. You could see the bonds that were issued at the Wednesday's auction came out at 13 for the 2027s. Came out at, 13 for 2027s, 14 for 2035s, 14.2 for 2049s. And all those bonds traded higher than those levels on Thursday and Friday to close the week. So the market is probably expecting, and the negative system liquidity in the squeeze the CBN has on banking liquidity via CRR debit, it also has its effect on where the direction of where yields go in the market. But I think the market is calling either a stay, they hold their policy, or an uptick in.
Talking about inflation, a lot of people ask a lot of questions about the inflation figures. They say, there's been a dip, where is it, and how do I feel it, how do I measure it, and all that. Are you one of those who ask those questions?
Not really, because we know that inflation is a lagging indicator. The effect, we're in May and we're getting April's figures, but we're seeing already the effect of rising prices and the threat of rising prices. I think there was a rumor going on during the week of a hike in fuel prices, and all those things.
The government has come to say that there's, now we do it monthly. There's no hike in May. There's no hike in June.
Exactly. So these things are not positive for decision making as a business owner. They're not positive for decision making as a home. The decision of where you're going to spend your money in the home. So these things we're already seeing it play out, and the figures that's coming out is just indicative of what happened.
What happened? What had already happened.
Yeah, exactly.
Okay, so let's talk about the launch of the Stock Africa is Made of. It's a campaign to bring more attention to the NGX, especially with the new branding and the subsidiaries and all that. How effective is it? Just a one-off thing? Do you see it having a ripple effect?
Yes, I think it's a positive thing for the capital markets that the Nigerian Stock Exchange, now the Nigerian Exchange Group,
Exchange Group.
made that move to demutualize, and then have its subsidiaries, more focused on their goals. So there's three subsidiaries now, one for the securities exchange business, the other one for regulation, the other one for real estate. And what it does, it allows each company have its own management, have its own focus on what they want to deliver, and should have, a ripple effect in the development of the Nigerian capital market. I also think it's a step they are taking towards eventually coming up with a centralized counterparty, which I believe is their plan for the derivatives markets, which they're working hard on as well. So I think it's a good thing for the markets that, and then this is something that global exchanges have done. Even FMDQ in Nigeria has already done that already. So they're keeping up with the times, and it also allows them to focus on what they want to achieve per each subsidiary.
And then now we're on the unlisted market. How soon, timeline, do you see them moving beyond that?
I don't think they're going to be in a rush to do that. They're going to want to do their due diligence and check the best time for them to come to the market. It would be, I think, it would be probably one of the most anticipated IPOs that we'll see this year. But I think what is more important than the actual listing is the fact that it shows the direction the group wants to take. Having a separate subsidiary for regulation shows how important they are focusing on the development of the market. What regulation does is it builds the confidence that in the capital market that allows you and I to rest easy, knowing that our funds, our personal funds, are with our asset managers, our pensions are with our pension fund managers, and they are investing in the same capital market. So that is what the group is trying to do, to focus on the things that they need to develop and build. And I think we'll start to see the effects of that, in the months to come.
So you think this is enough to win the confidence of Nigerians, or there are other things that could be done?
Yeah, it's part of it's like preparing a meal. Different ingredients come together in the pot. It's an important step. It's not a single one only step. But I think it's part of a bigger roadmap that the
What else do you
NGX
think can
group.
be done?
I think the first thing we can expect to see from them would be something with regards to the launch of an exchange-traded derivatives market. The derivatives market in Nigeria now is underdeveloped. It's only OTC, so those who have the knowledge, in the maybe banking sector, are those that create specific derivatives. But having an exchange-traded derivative market would boost liquidity in that market, would allow companies to take decisions knowing that they can hedge their risk using various derivatives market products. So I think that's the main focus that they will be pushing, and I can't wait to see what they'll do with it.
Yeah, so apart from, in Nigeria, what strategic global partnership should they be pursuing at this time?
The Nigerian market is young, and we can gain from the experience from other established and older markets. I think what the group would do now is, or maybe they already have it in the pipeline, is to engage with other markets like maybe the New York Stock Exchange, the London Stock Exchange, and see where exchange of not just information but data. So data is very, very key, and something that I know that exchanges globally, it's a unique selling point. Every exchange has data, and that is what they monetize and what they sell. I think that's where the securities exchange subsidiary of the group would focus on, and look on how they can build the data, and then make it as marketable as data that we pay for via Bloomberg or other platforms on global exchanges.
Okay, just before we go now, I know you mentioned it's your outlook for the equities for this coming week. You see it positive?
Yes.
I
Yes,
will
I
hold
do.
you to your word.
You can call me by Tuesday.
All right. Thank you so much for coming in, Ms. Ayanfolu, for sharing your thoughts with us. And enjoy the rest of your weekend.
You too.
All right. So that's a wrap for Capital Market for today. Thank you so much for sharing your time with us. It's always an interesting one. We'll see you again next week. I'm Ini John Mekwa.